Hey guys, Mike here. So Cathie Wood at ARK Invest, I think she's doing her round of interviews this week because I ran across the one she did today, and it took her long enough to finally admit what her biggest mistake was, but at least she finally admitted it. And then she goes on to say, "Hey, we're in a recession already." Right, which has been multiple economists and stuff come out and say that, and I'll kind of go into a little more detail on that because it's really not what you think. And then I'll talk about something I believe she was 100% correct on, and Michael Burry put out a tweet yesterday. He comes back every once in a while and kind of ties into what she was talking about, and he makes a prediction as well, or a warning really, and I actually agree with him. I think he's probably right on the money. It wouldn't surprise me one bit, and we'll get a little bit into that as well. But say what you want about ARK Invest. One thing it has is has loyal investors. And, right now, currently, as you can see right here, those inflows have been coming in and increasing in the whole month of June, actually. So, people are still investing in it. I don't know if it's for a short-term investment or long-term. We'll have to see on that. But people are still investing. And, in these interviews, you know how I do it. I literally have two short segments. I cut out all the 5-year stuff she keeps talking about, and then the usual rhetoric then she says in every single interview, and just give you the skinny. So here's the first part where she's asked about, would you have done stuff differently? Did you, is there something you're changing in your approach?
Cathie, one broader question and then a specific stock question. When you think, though, about the last year and you think about your approach, what is the lesson in it? Meaning, I know you have a North Star about specifically these stocks that you're talking about, but at some level, you have to look around, and I think your investors would want you to look around and say, okay, I was wrong. What was I wrong about? And if I was wrong, how am I going to change my approach in the future?
So if we were wrong on one thing, and that was inflation being as sustained as it has been. Supply chain, I can't believe it's taken more than 2 years. And Russia's invasion of Ukraine, of course, we couldn't have seen that. So inflation has been a bigger problem.
And don't forget to hit that like and subscribe button, guys, if you get something out of this. And let's be real. Did anybody expect inflation to really get this bad and this persistent, and it could go on for months and months? Probably not. Not really. Some people say they saw it, and I could see it last year. I think anybody could see it last year. If you saw the video earlier, we knew it was going to be a problem, but I think a lot of us thought the Fed would step in earlier and the government would step in and start doing something to help this instead of making it worse going into 2022. And so, again, that's the only mistake she says she made. Everything else in the interview, she's doing the same, the 5-year deal, all that stuff, okay? And I will say this, and take it as a grain of salt. It's meant with love, and just say this. If you are invested or going to invest in any fund that's just like ARK, okay, if there's other funds out there like it, or whether it be ARK or other funds like it, I should say, just understand you're on a one-way trip. Right? There's no hedging. There's nothing else in her funds. Everything is just, growth, high growth. And if we're in a bull run, everything will look great. But if the market ever turns, it's going to be devastating losses. All right. And when the market turns, and especially if it stays red for a long time, if you're getting close to retirement, good luck. That's kind of how this works. And understand, if you look at the charts, every 6 to 7 years, especially because of all the leverage we use now, right? All the crazy bets people are making, that, these turns tend to get worse and worse, and the losses are huge. And so, it'd be different if she hedged or whatever, but that's just not the mandate for her fund. So if you are in them, getting into any fund like this, just understand your risk is huge, okay? And I want to take another look at it if you're getting anywhere near retirement, by the way. And so, to capture those gains and stuff or something. But anyway, just going to say that. I want to put that out there. It just came into my mind as I was watching her speak. But, the part I think she was right about, which we're going to get into, is when she talked about the inventory. Last year, she warned about this. She said this was happening, double, triple ordering and all this stuff. And I think she's totally right, and that's what messed up the supply chains. And I'll get a little more in detail after you hear what she says, but, I'll give her credit for it.
But I think that it has set us up for deflation. I've been listening to your program. I heard Ken Langone talk about being in recession now. Jeremy Siegel, same. We think we're in a recession, and we think a really big problem out there is inventories, the likes of the increase of which I've never seen this large in my career. And I've been around for 45 years. And we're talking about the best managed companies in the world. If you're talking about Walmart and Target, they know how to manage supply chains. So if they have problems, we think there are a lot more problems. And then the other thing that's going on is the consumer is railing against these price increases. Consumer sentiment, as measured by the University of Michigan, which we think is the best measure out there, is down to record low levels, below 0809, below 80 and 81. I had just started my career and inflation and interest rates were in the double digits, 15, 20%. And consumer sentiment today is lower than it was back then. And most interestingly, in the last report, many people think, oh, the heavy spenders will keep this thing going. Consumer sentiment in the highest income groups is lower than in the lowest income groups, and the latter group is being, tormented by food and energy prices, which are really a regressive tax increase here to them.
Now, let me tell you something. These inventory levels have gotten so bad that Target and Walmart are debating on that if people actually return items, to let them keep the items and just give them the money back, because they don't want to take the inventory back. They got so much inventory right now that they don't even need. And this is where, she was right. They were ordering. And I have a friend of ours who does commercial construction, right? Totally different industry. And I was just asking him, I said, I notice these prices in lumber and steel, everything is just dropping off a cliff, copper. What? I'm just curious because they build huge buildings, right? And I say, how far in advance do you order, or were you guys like ordering a lot well ahead of time? And they said, oh God, yeah. I mean, he said they're sitting on steel and all kinds of building materials they ordered over a year ago for projects, because when they were trying to order it before that, it was getting delayed by months, and they were having to push back projects, which can cost you millions of dollars. And so then they just really started ordering. I mean, they said, whatever, we're good to go. We want to make sure we don't miss out on any of these projects, have to delay the projects. And because reputation's everything when you're in that business. And he said, you can't return it. And once you have it, that's it. You got it. And so there's nowhere they can put this stuff. And so it's similar to what Walmart, Target did. A lot of companies didn't think they could get it. They were getting huge delays. They didn't want to have their shelves empty, which you guys have seen stores like that. I have, especially back in 2021, 2020. And so they sat there and ordered all this stuff. And now this is where Michael Burry comes in at. He's warning, saying, you know what's going to happen? And Target's already said they're going to do this. They're going to eat all that money. They're going to discount the heck out of all that inventory just to get rid of it. Just get rid of it now. Eat it. Have a bad, third, fourth quarter, all that stuff. And then hopefully, actually say third quarter, and then hopefully by fourth quarter, they're good to go. But, they're going to discount all these prices, right? And what's going to happen is he's saying the Fed's just going to back off. They're going to totally flip and stop doing any more rate hikes, because by doing all this discounting, because Walmart and Target are so big, and of course there'll be other companies doing it too, that it's going to drive prices down. It's going to make it look like inflation is actually coming down, especially in the apparel and all that stuff. And so it could cause the Fed to say, oh, we're good, But remember, what's the Fed raising rates for and rolling off their balance sheet for? They're trying to push down demand. That effect of them just discounting the heck out of all their apparel and their inventory, that isn't demand coming down at all. That's just the prices coming down because they screwed up on the inventory. And she's right. The inventory levels are like, people have never seen this before, because guess what? We're in a period that nobody's ever seen, okay? And so, that's why you got reports coming out of China and Taiwan, because, remember, we don't make things here. We get it from over there. The orders being really low now, okay? And so another thing this causes is what? A slowdown. And that's what I was trying to figure out. I was like, with commodities coming down, people say it's because prices are dropping because demand's dropping. And what I'm trying to figure out, well, is it demand dropping because actually the economy is slowing, or is the prices dropping, demand dropping because these companies have so much of the materials already, they don't need it right now, okay? So that's not really, demand, it's dropping, but not because the people really need the materials, can't afford it, because no more this needs to be made, no more customers are coming into Walmart or Target. It's because they just have so much of it that they can't afford to buy anymore right now. They don't have any room for it. And they're trying to get rid of all this first, okay? And then you get this whipsaw effect, right? Where all of a sudden prices come down and then they're going to come right back up. Because now once they get rid of all the discount inventory, all that other inventory they're actually buying at the higher prices, the prices go back up, right? And so, I agree with it. I mean, if, like the Fed said, if they start to see these reports where they're just looking at pricing coming down and they're not taking it into account, these inventories go, wait a minute, is demand coming down? Because that's what they want, is demand to come down. Or is it just coming down because all these people are discounting all these prices, all these big companies? And so I don't know. I mean, it's an interesting debate. Let me know in the comments what you think about it. But it's so funny. Now we got this whole other problem. We had supply chain issues. Now we got this gigantic inventory issues with some of the largest companies out there. And, and it's amazing. I mean, it's like one problem after the other. Every time you think you get one fixed, another one pops up. And then how is that problem gonna, affect this? And kind of makes me sometimes wish I'd have paid more attention in my economics courses, but they were extremely boring. But yeah, I mean, it's just fun times, guys. Fun times, and we'll see. But you see, if you saw that Fed president yesterday, they're already hedging for July. They're already margin people out there to kind of set that table to say, well, everybody's thinking 75 basis points, but now they're saying, well, we might do a 50 basis point hike. Yeah, we might do a 50 basis point hike. If we see, the inflation coming down, it's like, well, how much do you want it to come down? Because y'all said you needed like 2 or 3 months, not 1 or 2 months. You wanted multiple months. And so, but they're already hedging their bets on this one. And so, it's going to be interesting to see, guys. Fun times. Hope you got something out of it. Hit the like, subscribe button if you did, and I'll see you tomorrow, okay?